You don't want to have to change your lifestyle and start to play board games instead of going out. Start to do staycations instead of going to Disney, whatever it may be. But something is happening in the US economy when traffic into and out of Las Vegas is down 1.1% on a year over year basis.
While the mainstream media remains focused on inflation and so-called soft landing narratives, the underlying data tells a very different story. Now, U.S. consumer confidence has plummeted to its lowest level since February of 2021, according to the Conference Board. And the Conference Board's leading economic index has now declined for 20 plus months straight. Historically, this kind of prolonged drop has always preceded a recession. In February 2025, it fell again, down 1% over the last 6 months. Yet, Fed Chair Jerome Powell tells us that the economy is still, quote, strong overall, despite trimming the U.S. GDP forecast to just 1.7% this year, the slowest pace, by the way, outside the COVID era since 2011. Now, Danielle, what's your take on the U.S. economy right now? Let's talk about it.
Well, my take is that by the time you start to hear the sell side come out and make these predictions, historically speaking, we've actually already been in recession. And that's my greater concern right now. We have seen a continued string of downward revisions to payrolls in 2024, throughout the year of 2024. It's looking like job losses did indeed begin last year. The private sector is showing no signs of abating in terms of continuing to cut headcount. And the word has definitely trickled all the way down from the C-suite to Main Street. I know that there's a lot of focus right now on the consumer confidence survey, but by golly, we saw 66% of Americans in the latest University of Michigan survey come out and say, we see a rising unemployment rate in the next 12 months. That's 66%. We've never been past the 60% mark without already being in recession. That's a past tense historical reference and data back to 1968.
Yeah. And talk a little bit about these red flags that you're noticing in the first quarter of this year, particularly that C-suite that you're talking about. I mean, what's your outlook for the rest of the year and what does it mean for earnings?
So we're seeing a dramatic pullback in CEO confidence. So that's yet another signpost. We had a burst of optimism right after the election into December, and the reversals that we're seeing from kind of these December high points until these March readings is absolutely unprecedented. We've never seen these kinds of pullbacks, and we looked back to the full history in some of these readings, and the reversal is really, really breathtaking. Challenger Gray and Christmas, they've been a little bit behind in being able to track layoffs, but in the month of February, it seems like they played a mean game of catch up, tallying 172,000 layoffs. Only 62,000 of those were in the public sector. That's what we were expecting, of course, given all the announcements that have come out of the new administration. But again, it was 172. That means that the vast majority of layoffs are still occurring in the private sector, where full-time employment, again, in the private sector peaked in April of 2022.
Wow. Okay. Well, I mean, we've been talking about a little bit about this silent recession for a while, and we're starting to see it in the private sector. What will the experience be like for the U.S.? How bad of a recession will it be? I mean, will it be tougher than the silent one we're seeing now?
Well, I think that the visibility of the recession will certainly be unwelcome. And that's always going to be the case, right? I mean, Americans are pulling back on their plans for vacationing. They're eating out less. When you're talking about discretionary spending on the goods and the services side coming down, these are lifestyles. These are lifestyles that are going through dramatic changes. And when you're not able to splurge and take the family out to dinner once a week or go to the movies or whatever it is that is in recreation spending where we're seeing serious declines, that is something that nobody appreciates. You don't want to have to change your lifestyle and start to play board games instead of going out. Start to do staycations instead of going to Disney, whatever it may be. But something is happening in the US economy when traffic into and out of Las Vegas is down 1.1% on a year over year basis.
I'm going to pivot here because we saw gold break above that new historic record of $3,000 an ounce. And there are many drivers involved, obviously, from tariff fears, geopolitical uncertainty, and central banks around the world continuing to add gold to their reserves. But recently, Mohammed Al-Arian, the Queen's College Cambridge president, told Bloomberg that gold has broken down all historic correlations. He further pointed out there's something going on about the dollar internationally, and that it is something that they take very seriously. How do you view what's happening in the gold market at the moment?
So I'm not possibly looking at it as closely as Muhammad Al-Arian is.
Hmm.
I
Hmm.
still think that a lot of the buildup in the gold reserve is a reflection of geopolitical tensions. We're seeing $1 trillion of spending come out of Germany. Uh, and there is still major dislocation in the financial system. We haven't seen a working out of a lot of the bad debts, and the place to hide remains gold. And so I see that as I still see the underlying fundamentals for the gold trade as being well grounded. And you've just mentioned in your preamble to the question to me sources of natural buying for gold. And for that to continue, if China was just to increase its gold reserves to that of any other developed nation, then you're going to see a floor put underneath the gold price. But again, gold is your ultimate hedge.
Yeah.
And in times of the higher uncertainty is in general, and I think we've got acute uncertainty, whether you're talking about trade policy or geopolitics right now, or the global economy for that matter, the higher the uncertainty element, the higher the price of gold. And we're certainly seeing that reflected. I'm not looking at it as complex in the same complexity as he is.
Hmm. Yeah, no, well said. What about the gold movements across, the pond here? We're seeing all this gold being shifted over to the U.S. It seems to be telling a story. You keeping an eye on that? I mean, what it signals?
I mean, again, it truly is a reflection of, I mean, this is the safest of safe havens. If you're going to park
Hmm.
it somewhere, you're going to park it where it's going to be the safest.
Yeah.
So maybe I'm being oversimplistic. I hope I'm not. But the higher the degree of the potential for, you know, as I say, this is my mantra. Maybe I'll make it even simpler than this: currency war, trade war, cold war, hot war. The closer we get to the opposite end of the spectrum, the more you're going to want to be sure that your gold is safe. And I think that that's
Hmm.
one of the reasons that people are flocking into gold mines as well.